when we talk about the pain, I think last week we did a video talking about the real deal, right? The real deal has been on top of all the syndicator pain. They're creating cartoons of all these GPs that are blowing up. We're seeing more and more foreclosures in Texas, of all places. I read about more yesterday. Does that stop? And in my opinion, if your debt service is already below one DTR, right? This doesn't save you. If you're already in trouble, doesn't save you.
This will save people who were close to the line, right?
Yes, but not over.
But not people who are well under the line, right? So
correct.
And the thing is, so think about it this way. I mean, when people were buying, buying properties at 3 caps because they were getting debt in the 3s, right? Their debt had a 3 in front of it.
Absolutely.
Yeah, and now the debt has, even if the funds rate is at 4, when you put in the spread for the more, and spreads are very high right now. This is another thing
they are
not focused on, right? So typical spread is about 200 basis points, give or take. It sort of fluctuates between about 150 and 200.
Sure.
Right now it's at 285. And so what that says, this is something I think not a lot of people are really focusing on. Everyone's going, well, look, the Fed rate is dropping. We're going to have these rate cuts, like woohoo, right? But the banks are looking at that and they're saying, we're not so sure.
Right.
So we're going to put this big ass spread in here because we don't think that the rates are going to drop that fast, right?
Yeah.
So we want to make sure that we're protected in case they.
I've talked about this a lot on my channel because, again, in the residential space, the spread was over 300 basis points for almost a year, and the average is 180. The reason that's important is there was over a point drop just in margin. And what I've been saying for quite a while is the banks have to believe the Fed is done.
Yeah.
I think yesterday was a watershed moment. I think Powell said as clear as he can, the rate hikes are over. The dot plot shows rate hikes are over. And just yesterday, we saw a huge drop in the 30-year mortgage rate. It went from like 7.08 to 6.82, and the margin fell to 282 basis points. So we might be on the cusp of margin compression. And then if you get the follow through with rate cuts, dude, Jonathan, we could be sub 6 by the summer. This is wild.
So, I mean, listen, so I guess the thing is in the spread, and the spread is the thing to watch, and we should watch it from here on in. I think the spread is telling us what the banks think is going to happen. And so you may wind up, the spread may still be high because the markets may be more aggressive about where they think the Fed is going than the banks are.
Yeah.
Right. So the spread in commercial, right? Maybe residential, it's obviously it's a different market and different spread. But the spreads remain high. So the point I wanted to make is that you're still looking at mortgage rates over 6 and close to 7 even. And if your existing debt has got a 3 on it and the refinance debt has got a 6 on it, you still have a big problem.
You don't have to break the cash in refi is not 50 million, it's 38 million. It's still a problem.
Yeah, and the cap rate still has to reflect the cost of capital.
Correct.
So the cap rate is also working against you. So the point is here, so just on the interest rate piece of this, the point is, lower interest rates, they help a lot of people, but do they help enough? Probably not. They probably are only helping some people who are really on the margin, they're on the bubble, but the people who bought at the top of the market are still not out of the woods by any stretch.